Online lenders, your realtor or lender might tell you that they're trash, but if you look online, man, those interest rates
look sexy.
Are they all what they seem to be? Well, in today's video, I have my client's permission to share their full pre-approval received from a popular online lender versus the quote they got from a local mortgage broker that's here locally in my area. Now, I'll tell you at the end what he decided to do and the strategy we took to get a better deal and get the best of both worlds. But for now, I'm essentially going to break down the cost difference and essentially the experience difference that was given to not only the consumer side of things, but my personal experience. I'm also going to share with you the actual numbers. And you can also use this video to kind of figure out how to, compare costs on the loan and really get a good idea of which loan is better, like if you're getting different quotes from different lenders. So first, let's start off with the actual quote they got from the local mortgage broker. So here we have the initial fees worksheet. I did remove all the information. So you're going to see that the borrow information and the loan information is going to be gone. But all the numbers you see here are going to be accurate. He is looking at a $430,000 price range, and he got the loan amount of this. So we can calculate that the down payment was at $21,500. It's kind of the top of my head doing that. Sorry if that's wrong. So essentially a 5% down payment loan. So it's essentially a conventional loan. He was originally quoted 3.25 and down payment, it says right here. And let's get going. So you see all the information here: appraisal fee, credit report fee, all of that stuff. And they do a good job of calculating what the recurring costs are, prepaid reserves, and essentially all in all, approximately cash from buyer would be $29,000. So I'm going to show with you how we compare those numbers with the online lender, but for now, I just want to make sure you see what's on paper. So when talking to a local banker, local broker, mortgage guy, whatever you want to call it, I think let's go over the little quick pros and cons of each one. I think a huge pro with working with someone local is things feel a little more personal. So if there's some kind of issue or they're needing kind of special paperwork from you, you can simply go drop it off at their office. And it's good to know because I personally, when I know there's like problems happening or there's potential issues that might happen, I like that I can actually drive somewhere and like bang on the door like, hey,
Knock, knock.
A second pro is a lot of times the local folks have a little more flexibility with like weekend availability and, more late hours, early hours. And I'm saying you're going to call them at 2 a.m. or anything like that, but they are mostly a lot more available. So they give you a much better personal experience tailored to you so they can actually answer questions, while showing the houses and all that stuff. And when discussing the cons, it's important to know that they tend to be a little more expensive. Now, when I say expensive, the grand scheme of things, all loans, are they more expensive? No. But when you're comparing it directly with an online lender, it is definitely more expensive. Not too much crazy. It definitely does add up over time, but it is a little more up there. And of course, secondly, is sometimes local lenders don't have systems in places. So if they're happen to be very busy that month or that week, then you might not get the best experience unless they're a super big team. More online lenders usually have more of a companies and employees and people under them to really make sure that you're taken care of. So there's like little quick pros and cons just off the top. And now let's talk about our online lender. So once again, this is one of the most popular online lenders. You probably know if you've done your research online who I'm talking about here. So here, we get the same idea of the loan amount, same everything. And we're going to see the shocking thing here is that interest rate is a lot different than that local banker one. So if you go over here, you see the interest rate quoted here was 3.25. Huge difference. They actually used a closing disclosure because they were a little more further at this point, but they can see the breakdown of all the cost. And if you haven't seen it already, there is definitely a huge difference here, which we're going to break down for you here. So off the bat, it looks like the online lender is doing a much better job of presenting their fees to the table. Not only that, but the interest rate is just a lot cheaper. I mean, we're talking, was that almost half a point cheaper, which is going to save you a ton of money over the life of the loan. So now what I like to do is I don't like to get complicated here, essentially pull up an Excel sheet or a Google Drive sheet, whatever you think is easier for you. I'm going to kind of speed it up here because I don't want to really, bore you that much, but I'm going to display it so you can kind of see my process so then maybe you can duplicate it yourself. So, all right, here you go. Was I covering myself the whole time? I pulled out an Excel sheet. You can use Google Drive, Google Sheets, whatever you have that is free. So what I did is I essentially wrote down everything on the closing, and some of these are a little different because they have different names, but you kind of start seeing the patterns of what is what. And we put it in a category. In this case, if it was you, you would put loan 1, loan 2, loan 3, if you're shopping different loans. In this case, I just labeled it local, then online. And then here I have the prepaids. And the reason why I have prepaids in separate a category is because prepaids are the lender's assumption of what you're going to have to prepay. Let's say your homeowner's insurance is $1,200 per year. Well, they might collect 3 months of that in advance to kind of pad that account. So they might collect $300 from you. 3 months, $100 each would be $300. So the lender is really guessing what the prepaids are going to be. So hazard premium being the hazard insurance, the house insurance, the hazard impound being the 3 months, or the tax impound being, 6 months of tax payments that are being collected with the closing costs. So I put these separate because it's just the seller, just them getting an idea of putting that. And then once I have everything written down and nice and fancy, at the very bottom, I'm going to do a quick little formula. For those that don't know, it's just equals sum. We're going to parentheses and just highlight all that area. Close parentheses and push enter. And then we get a good idea of the total. And we're going to just move that here so we can copy it there. So we get a good idea of what each individual total is. So off the bat, we see that definitely it is a lot cheaper to go there. But here's one thing I noticed about the local lender, okay? They're totally blowing these title fees here. So if we're going to, let's highlight everything that's going to be title fee, because the title fee has nothing to do with the lender fees itself. And right now, if you're shopping around for loans, we're only shopping around things that are able to be controlled by the loan. So title fees are not be able to control. Processing, recording is a title thing. Wire transfer, flood cert, that's also going to be title. Underwriting is going to be one that actually we're going to focus on because that's a loan lender fee. Processing fee is a lender fee. That's actually 0 on this end, not 455. Title endorsement is going to be a title fee. Notary fee is going to be what the title is going to charge. Credit report are that. So if you really look at the closing costs, what I'm going to really hyper focus in on is what the actual lender is charging me, okay? Because the title fees is just their estimated guess. You're not going to know exactly what that is. And if you want to find out what the title fees are, you simply have to call the title company, or maybe have your agent give you a few, examples of similar houses in similar areas and what the title fees were for those. So if you really focus in on what the actual lender fees are, you're going to notice that there's a huge difference between the local and the online lenders. And the difference is that this underwriting fee, the $995, is 0 for the online lender, and the processing fee, $595, is 0 for the Better Mortgage, the online lender. And it's no surprise, because if you go on their website, they do tell you about this. They do not charge an underwriting fee, so essentially saving the buyer almost $1,500 just off the bat. Pretty big, especially if you're paying your own closing costs, right? Let us not forget the interest rate. The interest rate for the online lender was 2.75, and the interest rate for the local lender, 3.25. A big pro I'm seeing already with online lenders, or the specific lender with Better Mortgage, is that lack of closing, whatever the loan origination fee and the underwriting fee that they're completely removing from the table. I mean, if you really actually give the actual accurate numbers of what the title fees are, because they are a national online lender, so they're not going to know the exact Arizona ones. But if I really apply that, and let's say I go back here and I copy all these title fees that the local lender actually gave me, and I put it with these, and I don't put those super high ones, I mean, it's a huge difference of closing cost. Here, we're going to do a quick little formula. This minus this. It's a almost $1,800 difference of closing costs. And in this market, when most buyers are paying their own closing costs, that's a huge, $1,800 is going to really make or break you. That's money that you can put towards being creative with the offer in some way, or maybe from the repairs or some sort. So saving almost $2,000 is definitely a huge difference. I mean, huge, big pro. The second biggest pro for sure is going to be that interest rate. I mean, half a point is a lot. If you don't believe in half a point is a big deal, let me show you what's up, okay? Using a quick amortization calculator online, I can see the huge difference here. So 30-year mortgage, 408 loan amount with 3.25 interest rate. We're talking about $231,000 of interest paid over the life of the loan. Say you're planning on having this house for 10 years. So if we look at the payment date of July 23rd, 2031, you're going to owe about 312,000 smackaroos. And by then, you would have paid about 119,000 of interest. Is that correct? No, that's not correct, is it? Yeah, it is. Holy crap. Yeah, so you're going to have to pay 312,510 bucks you'll have as a balance. So you're going to notice when I switch it to 2.75, look what happens to the monthly payment and look what happens to the interest rate. The monthly payment is not going to drop that much, but the freaking interest you paid over the life alone is like almost $40,000 that you saved. And on top of that, if you find the 10-year mark, the July 2031 mark, you're going to owe, previously I think it was $312,510.98. Well, you're going to owe $6,000 less. Meaning if you were to sell the property, since you paid less interest, approximately $6,000 less at that point, you're going to actually make more money. You paid less per month because you had a lower monthly payment, yet you'll have more equity. That's kind of crazy, right? So interest does make a huge difference, approximately, what was it, $30,000, $40,000 between the first interest paid and the second interest paid. So we're not talking about just a difference of $1,800. We are talking about that main interest of the interest paid over the life of the loan. Immediately off the bat, client was super happy with the online lender, and they're like, yeah, this is it. I mean, it just does make sense. Look at the interest rate, look at everything else. It just makes perfect sense. So at that point, what I recommended the client to do is I said, listen, the online lender is definitely a lot better, but here's what I recommend you do. Give a call to the local lender, present what you were given, and just say, I would really want to make it work. But here's the thing with the online lender, and this is why this is one of the cons. You're not working with someone local. You're working with some kind of employee in another state. That's not really, they're there to help you and whatnot. But if you call them on a Saturday afternoon when you're showing houses, they're not going to be there. When you're presenting an offer and the seller has a dozen offers that's presenting on Sunday evening, you can't call Better Mortgage or an online lender to say, hey, it's Sunday afternoon. Can you please call the listing agent to just tell them how well qualified they are? They're 9 to 5 employees that probably will not be available during the weekend. So anyways, that's one of the cons. They talked to the local lender. They said, this is what the online lender's providing me. Can you beat it? And, they worked out the numbers between them. I think they ended up getting pretty close to that interest rate that was offered. They had to get kind of creative there, and they had to maybe pay some interest down. But overall, so with them lowering the interest rate, even though the client was going to pay a little more in the closing costs, he saw the value of being with somebody who's going to be local, who was going to be there to answer the questions they needed. That's one of the things I recommend for sure, is you want to make sure whatever you go, whatever route you take, don't be rude about it. Don't call them and be like, hey, here it is.
Fight.
Don't make them fight over each other to the death for your, just simply say, hey, this is what the other lender provided. You might need you beating it, right? Especially if you already found one that you like more than the other. Just present it. The guy ended up getting a much better interest rate and definitely saved some money on all that stuff. So, a little uncomfortable conversation saved him, thousands of dollars over the life of the loan. I think you should be okay with that as well. When I asked the client what his thoughts were, this is what I was told. Another thing I liked with the online lender is they give you instant loan estimate. For the local lender, I had to call them every time I wanted to tweak one of the parameters. Not a huge deal, but can make comparisons a lot slower. They also didn't give a loan estimate document until after I decided to go with them. They gave details about their loan using their UI instead. That's his feedback that he had. And like he said, we ended up going with the local lender in this situation because they were able to kind of match the deal. The thing about your online lender, guys, is it can definitely be way cheaper. If you're someone who doesn't really care about having someone to be there for you, for your freakouts during the home buying process, it definitely makes sense. One thing you need to keep in mind though, is that they do give you a lot cheaper closing costs and a lot better interest rate, but you're doing a lot of the processing yourself. You're doing a lot of the document collection yourself. According to what a lot of local lenders said when I talked to them about the online lenders, they're essentially your own underwriter. You're the one getting all the information and documents to them so then they can apply it, right? Whereas when you work with the local lender, you get assigned a loan processor who essentially is responsible to not only collect all your documents, but making your loan seem the best light possible so the underwriter will accept it. With the online lender, they're going to just simply ask for a list of documents and present them, and you're basically doing all the heavy lifting, if you will. So, dang, King and Queen, you're still watching this? Thank you so much. I appreciate it. Hey, if you're looking at online lenders, make sure to look at the points they charge. They like to give you a nice little cheap rate, but then if you look closely, they actually charge you thousands of dollars. So make sure they're giving you that without any points. Cool. Overall, both of them will be pretty solid experience. So I do definitely recommend you. I think the golden standard should be, if you are getting pre-approved and you're a higher credit score, check out a local lender. And then, of course, check out a online lender and see if you can make them give you a good deal if you combine the efforts. So if you're looking for a local agent referral for someone if you're looking to buy in your city, state, and of course, you're looking for an agent there, check below. I do have a great agent referral program for you to check out. Other than that, what was your experience with the online lender or local lender? Is there a reason why you went with the other? Or if you're not currently buying or you were buying and you changed your mind, what was your experiences with the pre-approval process for each one? People would love to know your feedback. I look forward to reading it. Thank you guys. Keep in mind, if I tell you to message me on WhatsApp because I got crypto, it's not me. There's a lot of scam bots out there in the YouTube comment section, so be careful. Bye-bye.